Good morning. Hi. Good
Hey,
morning.
hey, Chris.
Costa, I'm just calling Anthony. He said he needed the invitation. My invitation didn't go through. So I'm just going to give him a quick call to check that he's going to get on.
Okay, that's fine. You want me to give we've got time today.
Oh, great. Just give me 1 or 2 minutes. Thanks.
Morning, guys.
Good morning.
I'm doing the same. I'm just reaching out to my guys to see if they're showing up.
Okay.
Thank you.
Chris, how many do you have us waiting on?
Just two.
Okay.
You can go ahead and get started whenever Michael comes back or you feel comfortable, and they can come in when they get here.
Okay.
Yeah, that's fine.
All right. Anthony joined. So hi,
Yep.
Anthony. I was just calling you. So that was that was me on the phone. Welcome. Anthony's from the from the Tampa area, from one of your favorite states, Costa.
Yep. I'll get there eventually,
Yeah.
even if on a part-time basis.
By hook or by crook.
Yep. All right. Well, we'll go ahead and kick off the call. If anyone else joins, we'll let them in. And I'll keep the background story kind of brief this time because we have a smaller group than typical. But Salim, Anthony, thank you for joining us. Just a little bit about myself. I have a educational background in finance. I worked in asset management before making the jump over to doing this full time. I started off in retail banking and moved over to brokerage, and then asset management with Merrill Lynch, and then T. Rowe Price before opening the first store in Harrisburg, Pennsylvania. When I was working, I had a lot invested in my education, in my securities licenses, and I had no real intention of leaving my job. I had a really nice job at T. Rowe Price, and I enjoyed it. But I always had this entrepreneurial itch that I needed to scratch. And so I started looking at businesses that I thought I could run while continuing to work at my job. And I looked at businesses that I thought were non-skilled manager centric, meaning that the business itself is manager centric, but it doesn't take a skill to run it. And what I mean by that is, if you have a pizza shop and you have a, pizza maker, and the pizza maker gets sick and no one else in the business can make pizzas, then you either have to shut down, or you can go in yourself and make the pizzas, or you can serve a substandard product. So for me, I looked at a bunch of different models, and I thought the quick lube space was one where on the manager's day off, the store is already being run by the other employees. So there's clearly an opportunity here for having manager-led stores. And so Harrisburg was the first one. It was about 6 months in that I was having too much fun running the business, and I decided to jump into it full time. I left my job at T. Rowe Price and left the certainty of a W-2 job and dove into it full time. But I thought we really validated the model because Harrisburg's car count started going up very rapidly. We opened a second store in a town called Dillsburg, Pennsylvania, which is about 6,000 people, and that was another validation of the model. While I was still at T. Rowe Price, I was spending a lot of time just reading reviews and trying to reverse engineer the issues that our industry had. And there were some pretty glaring problems in our industry. And so I felt like we could solve them. And we were also really on top of the most cutting edge marketing methods. So we weren't just doing billboards, direct mail, and Google AdWords. We started doing other mediums that allowed us to be in a space that the Jiffy Lubes and Valvolines of the world weren't participating in yet. And that kind of arbitrage really helps when growing the business. And so we got to about 10 stores, and our business was always very consumer centric. And we've always put the consumer first. But at around store 10, I started thinking about how do we make this more operator friendly? And that's when I partnered with Fran Devco and those guys to try and create a model that was obtainable for everyday operators as well as sophisticated investors. And so that's how we got to where we are right now. And this is the real abbreviated version of this. There's a lot of stories I could go into and talk about this all day. And Chris and Michael have heard all of them. But, at the end of the day, we feel as though we've created a model that is really sustainable. We think it's what the consumer wants, and it's the one model that is not so burdensome that an everyday operator couldn't get into it, which I think in the long tail will lead to better service provided across the country as we scale. When you have a business model that only private equity or family offices or ultra high net worth individuals can get into, then you get into a portfolio game. And when you get into that portfolio game, then the service suffers. And so I think that our long tail on this is going to be really nice, and it's going to prove out to be the sustaining model in the quick lube space. So I'm going to go straight into Q&A, and we only have 2 people today, so we can, ask as many questions as we need. We do have Discovery Day once a month where we get into the weeds. So if we can keep the questions to be as macro as possible, that would be fantastic. I don't go into super specifics here because that is what Discovery Day is for, but I will answer whatever questions that you guys have, and I'll let Michael moderate that.
Oh, great. Thanks, Costa. I just wanted to reiterate one of the things that you had mentioned, and I know Chris and I talk about it on our calls, is that you really, I believe, truly for the first time created an opportunity in a space that is very attractive to many people, but was out of reach given the huge amounts of investment that are required to get other auto lubes up and running. And I think it's great you've got the model to a point where you have the opportunity for someone actually to operate it, and then very simply with the systems, and then also provide the opportunity for someone to scale, and they don't actually have to work in it. You can run it through a manager. So anyway, Anthony, you're on the left on my screen. Why don't you go ahead and ask questions first, and then Salim will get you. Maybe we'll take turns, one question each, and move back and forth.
Yeah. Good morning, everybody. I'm Anthony from Tampa, Florida. Yes. The question I wanted to know, the question I have is, that I know you said the franchise is for 15 years. Okay. At the end of the 15 years, I just want to know what happens. Say either you sell or you renew. Okay. If you sell, what happened to the money? I mean, do franchise what is it? Do the person who opened this how do you split the income? When you sell the place, I think that was the question I asked yesterday. In other words, what part of this amount do the owner get, and what does the franchisor get? Whatever. Does that make sense?
Yeah, sure. And that's a question that's specific to the 2022 FDD, because we did remove some of the language around us taking a portion of the sale proceeds. So, the value of the business is highly determined on how the business operates, obviously. Where there are renewal options. And so it's not like once the 15 years are up, you have to either sell it or renew it for another 15. There's a few different renewal options, and Michael can go through that with you with the new FDD that will be coming out in early April.
Okay.
But as far as the sales proceeds, you know, typically franchises do take a portion of the proceeds of a sale because of the brand equity that gets built from franchising. But we removed those provisions for 2022. And so we'll have to follow up on the specifics to that because we're in the middle of changing that over, but we can definitely get you the 100% specific answer to that question.
Yep.
Okay.
Anthony, I spoke with Costa yesterday after you and I spoke. He and I had a conversation. And one of the things is the new FDD will be coming out, I believe, April the 4th. So, you know, I'll redisclose you at that time, you know, in time before you come to the discovery day. And we can go through the business. But generally speaking, you know, if you've got cash flow, in most cases, franchises sell on a multiple of the EBITDA profit, you know, before earnings, tax, and amortization. And so what we would do is, you know, if you didn't want to renew, I'm just going to give you a broad view, then you could sell the cash flow, and maybe you want to do it, you know, before the 15 years is up. And generally what franchisors do is they then give the new franchise owner another agreement that's valid at that time. It could be 12 years or 15 years. So you wouldn't lose your investment. Yeah. Great. Thank you. Salim, you with us? Do you have some questions? Oh, sorry.
Yeah, not specifically any questions. I did speak with, I think Christina is the person helping me. And I'm just waiting on the new FTD to see what changes you guys have made and how the unit economics are with more units, because the first one she shared had only corporate owned units. So I'd be curious, you know, as to what the numbers are with other franchisees operating the stores.
Yeah.
So just to add some color to that, we won't have any franchise locations on the 2022 FDD because the first store that opened is in Mesa, Arizona, and that just happened this month. And so we started selling franchises in late March of 2021, and we sold our first franchise agreement in April. So it's been almost a year to the date that we started franchising. So we haven't been doing this a long time. And we're going to have a handful of stores come online over the next quarter. And we can certainly connect you with those operators because of the regulations around what kind of disclosures can be made from the corporate level. You can have a more free conversation with the franchise owners because they're free to say whatever they want, good, bad, or indifferent. So we can help you out there.
Okay. Yeah, I'd be definitely interested in having those conversations and see how best I can understand the model better.
Yes.
I have experience with, you know, different QSR right now. And then obviously the model so far is pretty interesting, and I would like to know more, you know, so.
There are going to be more corporate stores on the 2022 FDD because the FTC changed the rules around disclosure of the affiliated locations. And so last year, the reason we only put 4 of the 16 locations was because I wanted to make sure that it was an apples to apples comparison. We have several stores that are connected to car washes. We have several stores that are a part of auto malls. And so we really limited it to freestanding buildings that were either 2 bays or less. And that's why, you know, we limited it. But for this upcoming FTD, we've included essentially every single store that's been open for more than 12 months per the new guidelines. So there will be new information on the item 19 for the new FDD. So that will be helpful as well. But again, the franchisees are allowed to be more discreet, not discreet. They're allowed to basically talk freely about the numbers. So we can make that happen.
Okay. Also, the other thing I was curious about is the cost of sales, like cost of the raw product. I think it was disclosed at like, I think 34 or 38%. I don't remember exactly, but seems a little high. Is that pretty standard for the industry?
I believe, I thought it was 27, but 30 is industry average. We are highly tied to the commodities market because oil filters are made of aluminum and oil is made from oil. So we fluctuate, and the price of oil changes has traditionally not changed very much over the last year. So while the cost of everything goes up and down in fluctuation with the market, the prices are typically pretty stable. However, there's been a massive increase in pricing across the country for synthetic oil change, and ticket averages have gone way up across the board in response to the volatility in the oil market. But you know, our COGS are oil filters, additives, and motor oil, and so that's your besides your labor, that is going to be your largest part of purchasing. Now, unlike the food industry where your margins are super high but your product is perishable, you know, oil sits in the tank. You know, when you have a situation like a COVID, or you have you know, the store shut down for a week for whatever reason, you know, construction in front of the store, whatever, none of the product on the shelves go bad. And so you have a lot of the benefits of a QSR style business without the perishing of the product. And so the goal is just to get to that point where you're high volume, because the economy of scale starts sliding upwards once you start doing those higher car counts.
But Costa, I think, you know, what one thing to mention here is the supply chain that you've set up with PetroChoice, and the pricing on the oil and the oil filters, I think gives you that additional margin over standard auto lube in the market, which I think is a compelling thing about your brand. Correct?
Yeah, so we have a partnership with a company called PetroChoice. The distribution of motor oil, the logistics of it are very difficult. It's not an easy product to have uniform logistics across the country, and so there's only a couple of what are considered national distributors. And so PetroChoice has promised us that at their corporate distribution facilities, they will make sure that all of our franchisees, regardless of if they have 1 store or 10 stores, they get the purchasing power of the corporate locations. And so as we grow as a company, we'll continue to also have that economy of scale as well. We are one of PetroChoice's largest customers, and so we have premium pricing. And then for markets where they don't have corporate stores, they have a market of sub-distributors that fulfill their products as well. And so we have a map that we can share. We share it at Discovery Day that shows their footprint. But typically in the past, if you've tried to scale as a company, even, you know, companies like Jiffy Lube, you know, there's not real uniformity amongst the products. Not everybody is in the Pennzoil installers program. And so some of the Jiffy Lubes might be using Peak oil, some of them might be using Sunoco oil. And then also even within the Shell brand of products, which is Shell, Quaker State, Pennzoil, if you're getting your oil from a blending facility in Wichita, Kansas, it might be different from the store that is in Brockton, Massachusetts. And so there are, you know, at the end of the day, motor oil is essentially like a recipe. You know, each brand has what they want to be blended into the oil. You have base oil, you have viscosity, and then you have the additive packs. And so the SAE, which is the Society of Automotive Engineers, and the API, the American Petroleum Institute, have very stringent requirements on what can go to market these days. And so at the end of the day, in 2022, motor oil across the board, the quality of it, there's a lot of parity. And so this kind of leads into a whole nother conversation about branding and how does branding impact our business. And, we have a very macro view that branding in the quick lube space doesn't move the needle. And so we use a house oil, which eliminates a lot of the marketing expense that's built into these motor oils. Mobil 1 is a very expensive oil, and you're not getting a huge added benefit of using Mobil oil other than its brand. And the reason its brand is so expensive is it costs a lot of money to have a Formula One race team, and it costs a lot of money to have a NASCAR. And that all gets passed down to the very last part of packaging of the product. And so, we truly feel that in the quick lube space, that brand does not move the needle. Otherwise, the Mobil 1 Express lubes would have the most locations in the world, not Jiffy Lube. And so that's kind of our 20,000 foot view of it in terms of the industry.
Are we having to do a lot of discounting right now, or what's the model to reach more car counts?
Yeah, so we utilize discounting for new stores to get people in the door, because this is a pretty residual business. It's a very sticky business. And so we'll, every single person that comes through our doors, unless they're a 16-year-old kid that has never driven a car before, they're firing their old oil change place to come to us. And people typically change providers for one of three reasons: price, experience, or atmosphere. And so we have a very sticky business. It's a lot like the barbershop where, if you find someone that cuts your hair the way you like it, you keep going back to that person unless they give you a reason not to. And so one of the easiest ways to acquire new customers is through discounting. We cycle on and off of Groupon, which creates like a base level of customers. That's a pretty dangerous place to be. Some people get really reliant on Groupon, and I don't advise that, but that does create this level of customer base that comes through. And then we just utilize Facebook and Instagram right now, which bar none, still, even with the iOS 14 update, is the dollar for dollar, pound for pound, the best way to reach customers, and for the best pound for your penny. And that's a good way of doing storytelling and brand building. And that in a world of, race to the bottom on pricing, the only way you get out of that race is through building an actual brand.
So what's our ticket average right now?
So what I can do, because that is something that we can't discuss because it could be reverse engineered into financial representations. Michael or Chris can give the 2021 National Oil and Lube News industry-wide study that has all the information on car counts, average manager salaries, average ticket average of what oil is used. So there's an industry-wide study that is done every single year by our leading publication, and Michael and Chris can provide that to you guys.
Okay, that'd be great. Yep, thank you.
Yeah, Anthony, I'll send that to you as well. It's a really comprehensive report. Yeah. Anthony, any more questions?
No, not right now.
Okay. Chris,
Well,
you've been
yeah, no, if you guys can find the time to come out to one of our discovery days, we really do go into the secret sauce and talk about the processes in detail. I gave a really brief background on the business. I typically go in a lot deeper, but we've got some guests here in the office today. Chris, are you working with Royce, or was that Kristen working with Royce?
I believe that's Kristen.
Okay. Yeah, so he just walked into the office. He's visiting from
cool.
I think Alabama or Georgia. So but yeah, we're gonna give him a tour of the facility.
We've had Anthony and Salim, we've had a lot of interest from all over the country, actually, albeit that the company, started in the Northeast, mainly in 4 states. We've seen a lot of interest, and we're in a ton of states now. all the way across to California, and then down to Panhandle, Louisiana, Florida. Yeah, we've had a really good acceptance, from around the United States on the brand already. We're very excited about it.
That's pretty exciting.
Yes, it's good to know.
So when is the next Discovery Day?
We do them the third Thursday of every month. So the April one is on the 21st.
Yeah.
The May one will be the 19th.
Okay. Yeah. Sounds good.
Yeah.
All right.
Okay, we're good.
Awesome.
Yes.
Well, you guys
Nice.
have a
Nice
great
to
rest of
meet
your week,
you.
and- Yeah, and if you guys have any additional questions, if you get them to me in email form, I can always answer them. And Michael,
Okay.
Chris, Kristen, Chuck, they've been doing this with us for a year now, so they know the business model incredibly well, and so they can answer most questions. But that industry-wide study will definitely benefit you guys in some of those questions that were
Yeah.
asked.
Yeah.
Okay.
Look forward to doing that. Yeah.
Thank you. Yes.
All
Awesome.
right.
Thank you so much.
All
Thank
right,
you.
take care.
Thanks,
All right.
Costa.
All right.
Thanks,
You
everyone.
have a great day.